Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called Volatility Scaled Thrust. This strategy is built around a momentum measure known as the Pretty Good Oscillator, which gauges how far price has stretched away from its own moving average, expressed in volatility units. Over the next few minutes, we'll explore how it defines a genuine momentum move, how it enters both long and short positions, and how it manages its exits. Everything here is for learning purposes only, not financial advice. So let's get started. Let's start with the big picture. Volatility Scaled Thrust is a momentum-based breakout expert advisor for MetaTrader 5. It watches a single primary time frame and works on a wide range of instruments, from foreign exchange pairs to indices and metals, because of the clever way it measures momentum. At its heart sits the Pretty Good Oscillator. The idea is simple but elegant. You take the current close, subtract its own simple moving average, and then divide that distance by the average true range, which is a common measure of volatility. The result tells you how far price has displaced from its recent mean, but expressed in volatility units rather than raw price. This normalization is the key insight. A reading of plus 2.5 means the same thing on a quiet, slow-moving day as it does on a fast, wide-ranging one. Because of that, a single threshold can travel across different symbols and different market conditions without constant retuning. The strategy is designed to catch the moment momentum starts, rather than chasing a move that has already run a long way. It only acts when the oscillator freshly crosses its threshold on the current bar, meaning the reading was inside the band on the previous bar and has pushed outside it now. That distinction filters out slow drift and helps the approach focus on decisive displacement. In terms of who this style may suit, it's oriented toward traders who are curious about trend and momentum concepts, and who prefer clearly defined, rules-based entries and exits rather than discretionary judgment. It trades in both directions, so it doesn't rely on the market only rising or only falling. And it always attaches a protective stop-loss and a take-profit, both scaled to volatility, alongside an early exit that steps aside when the momentum quietly fades. As with any trading method, this approach can and will produce losing trades, and no indicator can predict the future. Think of this as a structured framework for studying how a volatility-normalized momentum signal behaves, not as a recommendation to trade. With that context set, let's walk through exactly how the logic works. Now let's get into the mechanics, step by step. Everything the strategy evaluates is done on the just closed bar, so signals are based on confirmed, non-repainting data. The expert advisor acts once per newly formed bar rather than reacting to every tick. On each new bar, it rebuilds the Pretty Good Oscillator. First, it computes a simple moving average of the closes over the basis period, which defaults to 21 bars. Then it computes the average true range over the ATR period, which defaults to 14 bars. The oscillator value is the current close minus that moving average, all divided by the ATR. Positive readings mean price sits above its mean. Negative readings mean it sits below. Next comes the entry logic, which is all about a fresh cross. The thrust threshold defaults to 2.5. For a long, the strategy checks that the oscillator was at or inside the band on the previous bar and has now pushed above positive 2.5 on this bar. That specific crossing is what signals a fresh burst of upside displacement, the start of a move rather than an already stretched market. For a short, it's the mirror image. The oscillator was inside the band last bar and has now pushed below negative 2.5, signaling fresh downside displacement. When a long entry signals, the expert advisor places a market buy. It sets the stop loss 2 times the ATR below entry, and the take profit 3.5 times the ATR above entry. A short does the reverse, with the stop above and the target below. Because both distances scale with the current ATR, the trade automatically breathes with volatility. That gives a reward-to-risk profile of roughly 1.75 to 1 on the fixed targets. There's also a third exit worth highlighting, the exhaustion exit. While a position is open, the strategy keeps watching the oscillator. If a long is running and the oscillator falls back through zero, that means price has returned to its mean and the impulse is spent, so the trade is closed early. A short is closed when the oscillator climbs back through zero. This lets winners ride while the thrust holds. but steps aside when momentum quietly dies before the stop or target is reached. Finally, the strategy never stacks new entries on top of a position it is already managing within the same bar. Let's read through the core of the MetaQuotes language code as it appears in MetaEditor. At the top are the input parameters you can adjust in the strategy settings. BasisPeriod is the moving average length, defaulting to 21. ATR-period is 14. ThrustThreshold is 2.5. The displacement in volatility units a move must cross. Stop and target multiples are 2 and 3.5, and lot sets the position size. Just below, we build the oscillator. We take the close of the just closed bar, subtract the moving average, and divide by the ATR to get the value named PGO. We store the positive threshold in up and the negative threshold in down. Now look at the long block. The condition reads, if the previous value was at or below the upper threshold, and the current value is now above it, that is the fresh upward cross. When it's true, entry is taken from the ask price. The stop loss is placed 2 ATR below, the take profit 3.5 ATR above, and the code calls trade.buy with those levels. The short block is the mirror image. If the previous value was at or above the negative threshold, and the current value is now below it, that's a fresh downward cross. Entry comes from the bid price. The stop is set 2 ATR above, the target 3.5 ATR below, and the code calls trade.sell. Notice both sides are fully symmetrical, and both attach protective levels straight away. Let's bring this to life on the chart, walking through it candle by candle. On the price panel, you'll see the candles, and in the sub-panel beneath, the Pretty Good Oscillator, with its two dashed thrust lines at positive 2.5 and negative 2.5, and a zero line in the middle marking the mean. Look at the first few candles on the left. Price is drifting sideways in a tight consolidation, and the oscillator is hovering near the zero line, wandering just above and below it. These readings are well inside the band, so nothing qualifies as a genuine thrust yet. The strategy is patient here. It is simply waiting for displacement that is large relative to volatility. On the fourth candle from the left, notice the oscillator lifting toward the upper dashed line as buyers start to press. Now watch the fifth candle. Price pushes up with a strong, decisive body, and in the sub-panel the oscillator crosses cleanly above the positive 2.5 line. On the previous bar, it was still inside the band, and now it has pushed outside it. That is exactly the fresh upward thrust the code looks for, and the buy entry marker appears. At that same moment, the strategy sets its protective stop below, at 2 times the ATR, and its take profit above, at 3.5 times the ATR. Follow the next couple of candles. Price continues higher, and the oscillator stays elevated above the upper line, confirming that the momentum is holding. Price then reaches the take profit target, and you can see the take profit marker where the long trade closes for its planned result. This is the scenario the design aims for, catching a fresh burst of upside displacement and riding it to the target. Now the character of the market changes. After the peak, price rolls over. Watch the oscillator fall away from the upper line, sink back toward zero, and then cross below it. That zero cross is important, because if the long were still open, this is where the exhaustion exit would have stepped in, closing the trade as price returned to its mean. Here the target had already been reached, so we simply move on to the next setup. Price keeps sliding, and the oscillator presses down toward the lower dashed line. On the 11th candle, price drops sharply, and in the sub-panel the oscillator crosses below the negative 2.5 line. On the prior bar it was inside the band, and now it has thrust outside it to the downside. That fresh downward thrust prints the sell entry marker. The strategy places its stop above, again at 2 ATR, and its take profit below, at 3.5 ATR. Watch the final candles. Price falls steadily. The oscillator stays pinned below the lower line, and price reaches the downside take profit target, where the short trade closes. Across both trades you can see the same repeating pattern. Patience while readings sit inside the band. A decisive cross through the volatility scaled threshold, protective levels attached immediately, and a target set at a reward to risk of roughly 1.75 to 1. Of course, not every thrust follows through like this. Some will reverse and reach the stop, or fade and trigger the early exit, which is why risk control is built into every single trade. So that's a complete walkthrough of volatility scaled thrust. We covered how the Pretty Good Oscillator measures displacement from the mean in volatility units, how a fresh cross through the thrust threshold signals both long and short entries, how the stop-loss and take-profit are scaled to the average true range, and how the exhaustion exit steps aside when momentum returns to the mean. I hope this gave you a clearer picture of how a volatility-normalized momentum approach is put together. Remember, this video is educational content only and is not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do occur. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like me to examine next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.